So you read the title right. COVID-19 is coming back. And I must say, I'm a little surprised how fast it takes to make a visible comeback. If you have been watching the news the past few days, then you probably learned that Texas and some other states who opened their economy back sooner than other states are now seeing a surge in new cases. As of making of this video, Texas, Arizona, and Florida are now showing the number, and I'm sure it will get worse. So why is this the case? Did they really open up too soon? And how is the stock market going to be like for the next little while? Well, then make sure to stay to the very end of this video to find out. And if this is your first time watching a video from this channel, then please consider subscribing, as I go through personal finance, investments, and well-being, and I typically upload 2 to 3 videos per week. Alright, so let's get back to the topic. So I was just mentioning, what are the possible reasons for this quick comeback? Now, for the average person, we may think that the economy have opened up too soon. But according to many health professionals, it's not because of how soon, but how fast. Many states or regions open up many sectors all at once or within a very short period of time. On the contrary, if the economy open up sector by sector, then the spread of the virus may be controlled a little bit better, just like seen in Canada. And of course, the past few weeks of mass protests also helped to accelerate the spreading of the virus. Now, I'm not saying that the mass protests should not have happened, but just stating the fact that mass gathering do accelerate the spreading of the virus. So let's separate the science and politics here. So you may think that these new cases are still a relatively small number, but take a look at Texas, where its hospitalization number is currently overtaking the number seen in early May. Shouldn't the number be progressively going downwards? And if you still think that the number is still too small to be of any concern, then please be reminded that all outbreaks started from just one person. So right now, cities, regions, and countries need to ensure that protocols and precautions are set firmly in place to handle the second wave. Because right now, the US is still seeing 10 to 20,000 of new cases per day, and the number seems to be creeping up. So now, let's move on to the stock market and the economy. During the past few days, the news of the coming back of the virus coincided with the market consolidation. In this case, the pause of the rallying of the market. It is not going up anymore except for the tech stocks that have been doing exceptionally well during the pandemic, like Apple, Amazon, and Google, that kind of stocks. So there are 3 things that are going on right now. Number 1, the coming back of the new virus cases, which are not really mentioned much in the news media. Number 2, the consolidation of stock market after many days of rallying. And number 3, the rallying of tech stocks. Let's take a look at how much the tech stocks have risen during the past few days. Now, I know Apple has some of its own reason for the rally, but what about the rest of the tech stocks? So you can see that the investors are losing confidence in the market and decided to park their money in the tech stocks instead during this time of uncertainty. Now, these 3 incidences seem to move independently for the time being, not really walking onto each other's path for now. But if the virus keeps coming back and the number of new cases keeps increasing, then you better believe that the market will be heading down once again. But there are a few key differences this time. Number 1, tech stocks will not see a dramatic fall this time as seen in March, because it is still very clear to investors that tech stocks, especially Amazon, is very resilient to the pandemic. But meanwhile, the rest of the stock market and economy will see a prominent fall. However, still not as bad as seen in March. And the main reason is that the chance of a lockdown is going to be very slim this time round. Countries like the United States cannot afford to have another lockdown. The government would rather put more effort into precautionary actions and testing protocols. And of course, the election is coming at the end of the year. So even though they probably would not have a lockdown again, but I think most people will still choose to stay home and not head out much. Also, you need to think that how many jobs will be returning. If less people are heading out, then less retail positions will be available and needed. Of course, another legit question is, how long can the Fed be giving out paychecks to people? If people have less spending power, would they care about spending for discretionary consumer products and even travel? So moving forward, how should we be trading? It is going to be very volatile for sure. If you are a long-term investor, keep doing what you're doing, investing regularly at certain intervals. For short and medium-term investors, you may start to invest more during times of consolidation for the next little while, as stock prices went up too fast for the past 2 weeks. But Nasdaq is going to be less volatile because 40% of it is represented by the big 5 tech giants, and these are all very well-run companies. So even if there's going to be a dip, it's not going to be that dramatic like seen in many sectors right now. And for day traders, I think there's going to be lots of opportunity during the volatile market. So overall, I think the investors' optimism is slowly fading, and the company's financial statements will finally be relevant once again. We have to keep monitoring the virus situation very closely for the next little while. There is just so much uncertainty and everything is up in the air. Alright, so if you think that this episode is useful, please consider giving this video a like and subscribing to this channel for more related videos coming in the future. And with that said, thank you so much for watching and peace out.